Hey everybody, welcome to Friday. This is Doc Severson for the Ready Set Trade. Today is Friday the 14th. Friday the 14th of April. Welcome aboard. All right, let's get going here. We've got a lot to do. So today we had retail sales, import-export, business inventories will be coming up. Consumer sentiment will be coming up as well at 10 o'clock. Let's go look at, see how retail sales did. Let's bring that report over. Okay, so we were consensus negative 0.4% consensus range, and actually we did way worse than that. So retail sales was actually quite poor, and this is for the month of March. So the Fed may have gone too far already, right? So yesterday we got the good PPI report showing that inflation's coming down, but at what cost? So that could be happening right now. And the futures are slightly down. They are not down very much, although the NASDAQ is down more so than the other indices. So let's keep an eye on that. All right, we don't care about that. Earnings for today, we had BlackRock, Citi. Let's take a look here at some of these. All right, so let's see. BLK, BlackRock was up. We had Citi. Citi is so far is still hanging in there. Wells Fargo is hanging in there. PNC is slightly up. JP Morgan is up the most. Yeah. All right, so who we got out there? We got Fred, Len, John, Juan, Willeke. Hello from the beautiful Netherlands with lots of tulips and flowers. All right, go Max, right? Go Max. Hey, Calvin. All right, so earnings were, I haven't looked at them in detail, and I typically don't. I don't bother with that. I just let the market tell me what's happening with the price. And so far, so good with earnings. Now, Fed funds futures are continuing to increase the probability of a rate hike in early May, coming up in less than, what is that, 2 weeks away, 3 weeks away, something like that. Okay, 14 June shows no change after that rate hike, and then we're actually cutting rates, maybe as much as 75 basis points after that by the end of the year. I actually looked at the 2024, I'll show you guys this, the 2024, let's see. Yes, I'm a tab monster. If we look at 2024, check this out. So a year and a half from now, more than a year and a half from now, Fed funds futures are pricing in 3% interest rates. Okay, so that kind of tells you what we're looking at going forward here. All right, weekly schedule. We are going to be here next week as well, Monday through Friday. And something that I read this morning, which I thought was kind of cool, is many people won't attempt something unless they can find an example of someone else who is already doing it. Rely on this type of thinking too much and you'll never do anything interesting. Your path through life is unique. It's important to extract lessons from the experiences of others, but you can't wait for a perfect example to take action. You are the example. And I see this all the time when it comes to trading. People are scared of risk and they want somebody to show them how to trade and take away the risk. So what you should be doing, though, is instead of that, you should be looking for ideas so that you can create your own strategy, which is an amalgamation of different techniques, which your subconscious mind will allow you to trade. And you will sense less risk when you do that. That, to me, is the holy grail of trading. It's not any one specific indicator. It's not any one specific strategy. It's more of finding things that are out there, finding techniques and strategies and different instruments to trade and different techniques and methods and those kind of things, and sort of wrapping them together in a big stew. And then finding ways where you invest in yourself, where you internalize that approach towards the markets. I've seen it many, many times. I've seen many, many people do this. Like Start out with a basic idea of an iron condor and say, oh, well, wait a minute. What if I adjust the time? What if I adjust the strikes? What if I adjust the way I defend these things? What if I get a bigger credit? What if I get a less credit? What if I play with the probabilities? So go ahead and play around with all those things. Don't wait for somebody to tell you, hey, this is what's worked for me, because you're not the same as everybody else. So I thought this was interesting and worth sharing with you guys. It wasn't related to trading, but I immediately saw the parallels to trading in here. Okay, let's get into today. So yesterday's iron fly got ran over. Yesterday's iron fly got run over like a truck. Okay, so let's go. Let's mark out the opening range here. Opening range. Oh, now I'm going to have to reboot this thing because I have the stack heap issue. You can see that sort of like pulsing. Yeah. It's a stack heap issue. That's what I understand. That's what I heard about it. And it usually only happens with tick charts. When you have something that's using tick charts. So you can see yesterday's opening range and then the opening range carried forward. Right? And then it just kept on chugging. This is one of those relentless trend days that we occasionally will get. And so far it's holding the gains pretty well. So unfortunately, let's see, what do we got? 3 minutes to go. I'm going to have to reboot this thing. I'm going to have to start from scratch. Just get rid of the stack heap issue. Yeah, go to the store. Inflation not coming down. You know, something else that I've seen, and like there's plenty of things to complain about, but you know, I look at things more of like, wow, that's interesting. But the service business or the service businesses have really been affected by what's happened over the past couple of years. I don't know if it's through COVID or attitudes through COVID or anything like that, but it's almost like we've forgotten how to communicate. So like, I'm just going back and forth with my wife's cars in the shop. And so first of all, I had to do the research to figure out that there was a fix or a TSB, technical service bulletin, for a specific problem that we were having with the car for the past year. We brought it in a year ago and they said, well, we don't have a fix for this. Yeah, we're aware of it. We're waiting for corporate to come. So no calls over the past year, suffering with the issue for the entire past year. And finally I called up and I said, hey, did you guys fix that thing? Oh yeah, sure. We got a TSB for it. Okay. Well, would you like to work on the car? Yes. So they work on it for 2 days. They claim it's fixed. My wife puts the key in, same problem again. They still have it. So people have forgotten how to communicate. They've forgotten how to look for root issues of things. We are going to go for 14 April options today, and we're about 23 wide today, 23 points wide. So it's just interesting to watch all of this stuff happen, and you kind of have to coach people through what to do as a consumer. It's wild. Okay, so here we go. Here's the opening bell for today. We're going to start with 23.09. 23.09. And I'm going to try a 25 wide today, and I may enter this as soon as I possibly can. I'm not going to worry about the 10 o'clock reports because I hope to be out of that by then. So as soon as we can determine that we have a range-ish day, let's go find our opening print for today. Not on JP Morgan. So there's the ES. Let's go find our gap chart and our opening print. We'll come back and look at the gap later. I just want to get the print. So we're gapping slightly down, but we're closing that gap pretty quickly. Opening print for today, 41.66 and a quarter. 41.66.25. And so that gives us an upper expected move of 41.89.34 and 41.43.16. Yeah, Calvin, I just got a new Ford truck. Well, I got a Ford truck a year ago, and all kinds of nightmares on that stuff. Fortunately, it's been perfect. No issues with it so far. Okay, so let's go mark out these expected move. We're going to move the upper one first. We're going to move it above the price. So that's going to get moved to 41.89.34. 41.89.34. And the lower one is 41.43.16. And there we go. All right, so those are our upper and lower expected moves. Let's go move our anchored VWAP. I'm going to anchor that to today's opening print. Let's rescale everything, and there we go. There's today's price. We've got a small opening range to begin with so far, and let's see what we can do. So I'm willing to be aggressive in this market. I want to be aggressive and not wait for safety. Okay, so let's see if we can center this around 41.50. And I'm willing to take a stop on this thing if I have to. And the stops will be, I'll show you where I put the stops in. So we're going to make this 25 wide. So this is going to go up to 41.75 for the calls and 41.25 for the puts. And that gives us a $15 credit. Risk profile, let's see if that is where we want to put this thing. Okay, do I put it there or do I give it? Yes, I do. So it looks like we're heading a little bit higher in the internals. So I'm going to go for it here. I'm going to go get some here. This is my complaint with this interface is it takes too many steps to get on board. So many steps to get into a trade. All right, 15.15 it is. Let's go stick it into a group. And we'll set up my exits for this. So we got in for 15.15. We want to get out for 14. What is it? 14.65. So that's 35 plus 15, that's 50 cents. So 14.65 is what we want to get out for. So my entry was, say, roughly 41.44. So that means that my stops are going to be 41.21. 41.21 down there, and 41.67 up there. And it looks like we're nicely moving into the center of this trade. We're getting some time decay. The risk of this trade is as much as $400 per contract. So I hope we don't have to defend the downside on here because we have a lot of skew. The risk to the upside is much lower. It's about 221. But this thing is starting to spin off some pretty good time decay right now. Okay, so we got 15.15 for that one. And we'll keep our eye on it. We'll keep our eye on this thing. Market internals are strengthening. Let's see what's happening on Market Watch. Probably a lot of tech is throwing off red today, and that could move. That could move back. Okay, so first of all, we're going to look at the sector spiders right there. And financials are up today based on bank earnings. Now, we also have utilities down. We have technology down, although discretionary is up, as is communications is down. So discretionary is up, and that might be either Tesla, or Amazon. Amazon is slightly up today. Not that much. A little surprised by that. Okay, let's see what JP Morgan's doing here. JP Morgan is gapping way higher today. Nice move higher today on JP Morgan. Okay, we're getting a little bit of a swing to the upside. Let's see if we have any drop in implied volatility. Not that much. Not really any time decay to speak of. Okay, let's see what's moving here. So financials are moving well. Energy is moving well as well. We have gone positive on the S&P. We're still negative on the NASDAQ, so plenty of room to go positive on that. Let's see what's happening with the fractals at this point. What is happening with our fractal energies? We are now getting into exhaustion on the 78-minute chart. Now, here's the big deal, is the daily chart is fully charged up. I mean, this dude has a potential for a big breakout, and this could be what gets us above 4,200. And I'm particularly going to be interested to see if we get a move above a gap higher on Monday. So is weekend money going to come in? Can I compare BTC and Ethereum with gold and silver charts? I think you can. I think we can. We'll give that a few minutes. If I don't get to that, please remind me. Okay, so today we're getting some push to the upside, a little bit of push to the upside. Let's see what's going on with this guy. All right, got to keep an eye on this thing. Not getting a whole lot of decay into the fly right now. Not seeing a whole lot of decay. Let's see what's happening with our, wow, that is quite a move here. So we're all above the VWAP so far. All above the VWAP. And this is coming back down, so we'll keep an eye on that. So what kind of things, if we do get a breakout from here, if we go back into quiet and trending, what are the things that we can do? So one of the things that we can do, let's go over to simulated again. We can go back to our 45-day TE iron condors. Now, there's a couple of different ways that we can do these. Oh, let's go maybe 47 days or so. Depends on what you want to do with these. Now, what I typically like to do is if we are truly trending to the upside, then what I will do is I will sell about 30 delta to the downside. So I'll do like 30 delta down here. And then I'll go out to about 16 delta. So 43.70. And then 43.75. So that gives us about a $2 credit. Okay, so ignore the lines here. So this, we definitely bias this thing to the upside with that. Gives us a lot of room to the upside for us to either make adjustments if we have to. So what I'll do is I'll start out this delta at 16. And then if it gets as high as, if it doubles, if it gets up to 32, then what I will do is I will close down the puts and then move them up again to the 30 delta. So I'll readjust this trade, bring in some more credit, and just keep adjusting the unattacked side. Now, if it drops to the downside, usually what I do is I just do nothing. And I let the price kind of revolve back again. Now, that didn't work last year. When we fall into a true bear market, this becomes very difficult to manage this strategy. You've got to wait until the implied volatility rises up again, and we've got something to work with. But this is one of the strategies that we will consider placing. The idea here is that we want to, if we get in for a $2 credit, we want to be taking it off at about a $1 debit. So we want to go for about 50% of the potential profits on the trade. And we can also go 50 wide with this too. So that's one thing I was doing. I was doing 50 wide. And that those are kind of crazy if you do something like that. So if we do the same strikes here, and instead of 40.70, let's do maybe 75 and then 44.25. And then we'll take 40.50, and then we'll go out to 4,000. So then we get something, instead of a $2 credit, we get a $16 credit, right? And so you're looking for somewhere on the order of $800 profit with something like this. Now, the risk is much higher with this, and you have to be okay with the risk of these. And so if you're looking at the potential risk of this now, we shouldn't be looking at a $3,000 risk, but if we do run into a black swan, what you have to be able to do is look at this 3,000 divided by 0.02, and that is, somebody's going to beat me to it. That's 150 grand. So you got to have at least 150 grand per position. And you can put on these things like once a week, unless your margin's too tight. We can also do the naked strangles on the MES. That's something else that we can consider doing. So there's lots of things that we can do. Lots of things that we can do with this. And of course, we can always do the iron fly. 0 DTE. We're getting a little bit hot today. We started low, and it looks like we're going to fill that gap. Let's see where the gap is today. And I may have to stop myself out on this trade, believe it or not. Okay, so we have already filled the gap, so the gap is no issue. This thing is just smoking today. And the NASDAQ is recovered. Notice what's happened now. The NASDAQ is recovered. The NASDAQ is almost positive for the day. We have communications coming back again. Financials are coming down. People are selling the financials and going back into tech stocks again. Go figure. So this fly is only down what's that, 82 or something. Right now, the topside risk on this trade is about 220. So we just need a little bit of time decay, and this thing will pop right back up again, or a pullback. Now, let's see. We have I got about 12 points of room. About 12 points of room. Let's see how much room we have. 83 to the expected move is up here, 6 points. So we've got a little bit of room that the price can hit the upper expected move and then rebound down from there. But look at the internals. This thing is this is the liability of entering early. This is the liability of entering early, is that you step in front of a freight train move like this. I thought with yesterday's move, we were not going to get these things back to back, but apparently the news on the banking is good enough. So even though we didn't we were negative on the day, so this is almost like a Groundhog Day move. Almost like a Groundhog Day move, where we start out negative and then we just rip from there. But it'll be interesting to watch how this closes today. It'll be interesting to watch how this closes today. Oh, let's see. There was a question in there. Let's see if I can find a chart. So if you want to, Wilkie, if you're interested in doing something like this, what you can do is you can compare like a BTC. Let's just go with a simple price chart. You can compare BTC with silver. And I'll just use the ETF here. So I don't know how they figure out the scale, but silver in this case is the orange line here. And I don't know if this normalizes the scale. I think it uses a percent. But you can look at the percent move on silver versus Bitcoin, and you can see that it's been quite extreme. Let's go look at silver for a minute. That's how you do that in TradingView. Boy, look at this thing. It's just is unstoppable today. Unstoppable. Look at that thing go. Okay. But this is what trading is about, guys. It's about experimenting and about looking for different ways, different approaches. What I've been doing in the past is waiting for the opening range to set up, being very conservative about how you enter, and then half the time, well, it seems like only about 10% of the time we actually get an opportunity to put a trade on board. Whereas you look back and you say, boy, if I'd been more aggressive at the very beginning, a lot of these would work out. So today was an experiment, and this is what you do. Okay, let's see what's moving today. We have, wow, gold is actually down today, or at least I'm seeing GLD way down today. So GLD is pulling back. Silver is slightly higher today, slightly higher. This has been an extraordinary move. I would expect this to slow down and consolidate at some point. We have, let's see. All kinds of things that are moving around here. AMD is actually moving slightly higher today. That's a nice flag. Let's see. We still have a position in AMD. What do we have here? We have the 21 April $95 covered call. Let's see. Where is that position? Wow, look at this thing go. We've got about 7 points, and then I'm going to have to pull the trigger on this thing and get out. Market internals, relentless today. Started off relatively low, actually somewhat negative, and we've flipped around over 300 advancers. Tick is extremely strong as well, too. So look at this thing go. So I'm going to look for some type of reaction at the expected move and see if it comes back down into the middle of the opening range. If that is the case, I'm going to look for ways to get out of this. We're not getting a whole lot of time decay, though, which is odd, right? So this is really odd that during all this move higher, we're not dropping in implied volatility. So looking at the SPX for today, 14 April, yeah, we've actually dropped the expected move. We started off at 23, now we're down to 20. So I'm a little puzzled as to why this is not showing better decay. We're hanging in there. This may be one of these cases where I end up closing this one way or the other sometime in the next hour. So unless this is a one-way freight train move that just keeps on trucking. And if it blows above that expected move, I'm probably going to have to get out. But if it reacts at the expected move and pulls back, then it may give you an opportunity. Yeah, Willicky, I don't really talk about cryptocurrency in this session here at Ready Set Trade. So that's something I do at Ready Set Crypto. On the live sessions, I usually do a live session in the afternoon at Ready Set Crypto. And you can see that on the YouTube channel. So you can, if you subscribe to the YouTube channel, then you'll be copied on the live sessions I do on crypto on that. But I mean, I'll talk about crypto here, but this is not really the purpose of this channel. We trade the equities here, and specifically options under the equities for the U.S. markets. So all kinds of things to trade out there. Okay, consolidating. Let's see. We do have the internals. The tick is coming down just a little bit. Let's look at the larger time frame charts. Let's see what we got. Larger time frame charts. Let's look at the chop. And we are almost at a level where I would consider, now I may consider doing on a 5 DTE iron condor, but I'm probably going to wait until Monday to do that. I'll do that on Monday if we have that exhaustion on the 78-minute chart down at a good level. Because what's starting to happen here is now we're starting to pick up this trend on the daily chart as well, too, because this is so strong. So we're starting to burn energy on the daily chart. But if we get the 78-minute chart down below 25, then we can consider. But I don't want to do this. I don't want to hold something over the weekend on this. I think that would probably be asking for trouble. Asking for a little bit of trouble. So pulling back a little bit. All right, there we go. We're coming down. Okay, any questions? Anything else for today? So again, if we break above 4,200, I think we're game on. And I may not even wait for that. But like what I showed you guys the other day, we showed the 112 strategy. I definitely want to wait for a pullback on that. But as far as the naked strangle, we could do those. So that is something that we could consider. I want to put that chapter up in the class platform. So again, for those of you that haven't caught this yet, if you go over to our site on elite.readyset.trade, there's the 112. So I've started to create the class on options on micro E-mini futures. So options on futures, pros and cons, Tasty Trade in the works. So right now, probably Tasty Trade has got the most liberal margin policy on these things. You can set these up in an IRA, and I don't think you can do that with anybody else. I could be wrong, but I know that this is, up to this point, has been a differentiator for Tasty Trade. I got to quit calling them Tasty Works now. And so the next chapter I want to put out is the Naked Strangle. The Naked Strangle. Willicky, I have no idea. I do not follow natural gas. I do not follow commodities. I am not an expert on that stuff. I generally follow the S&P 500 and the equity charts. But I just, there's lots of people out there that follow oil and natural gas and gold and silver and, commodities and, other things, platinum and things like that. What I learned a long time ago is it's really hard to follow a lot of things at once. It's much, much better if you follow one thing. And then maybe, we follow the S&P in here, the NASDAQ a little bit, maybe the Russell a little bit, maybe the Dow a little bit. But off of those, you can trade equities if you want to. But I don't specialize in equities. So we will look for, if we go back into quiet and trending mode, we will start to look for equity setups as well too. We will look for equity setups. Okay, what do we got? We got about 2 minutes left here. Let's see what's happening. Oh, there it goes again. So this may be, today's fly may be a bust. Super strong today. Super strong market today. And this really came out of nowhere yesterday. Like, we spent the entire opening range doing nothing yesterday. And then it sort of woke up and said, okay, let's hit the button. And boom, immediately up to the expected move. Consolidated around the expected move for a number of hours before it said, hey, I think we'll go higher for the day. So this makes sense. I mean, this is all what we were talking about yesterday, like big energy. We across the board, big energy. We're expecting a big move, big move, big move. So unfortunate that it happened to be in the opening range. So we're going to come back on Monday. We're going to find out whether we gap higher on Monday, and we're going to be setting up a potential 5 DTE iron fly. I'm sorry, not an iron fly, but a low probability iron condor, 5 DTE on Monday. So that'll be there. We'll see if there's any opportunity for setting up an iron fly as well too. So we'll see whether or not those are still existing, although this is a hyper trending market right now that we have to be cautious of. So it's range expansion from a consolidation, and we're breaking higher. This is the first time we've broken higher from a consolidation in the last year and a half. So that's significant change in market. All right, let's see what else is happening on Market Watch. So banks are really driving things right now. The NASDAQ is waking up, though. That's the biggest difference in today's market. We have communications coming up like the Googles and the Metas. If we look out here at just this single chart, Google's waking up. It's up 0.4%. Meta is very strong today. We have, let's see, Apple's barely up. Amazon is up 0.4%. Tesla is still slightly negative for today. AMD is up as well too. NVIDIA has been super strong lately, up 1.4% from a flag. Tell me this is not going to break higher from here. Tell me this is not going to break higher. That looks really good right now. Let's look at NVIDIA on a main fractal chart. We may set up a play on this one. NVIDIA, we have earnings coming up in 5/24, so we have actually quite a bit of time. Look at the energy on this thing. Yeah, I think over the weekend I'm going to set up a potential call spread on NVIDIA. And let's see what we would do to do that. Call spread on NVIDIA, so we would set up maybe 35 days, $5 wide spreads. Let's see what kind of setup we can get with this. 265. That's not too good. Those are not too good. Let's see if we have any better options with the weekly options. Let's try 26 May. Let's try 265, 270. Oh, that's a little bit better. A lot of skew in these things, though. A lot of skew. Okay, one last look. Market's coming back down. Maybe got a chance to save my fly. We'll see. All right, guys, that's it for today. That is all the fun that we can have for today. So when we come back on Monday, we're going to start to become much more aggressive, I do believe. I think we're going to have much more to work with for this market. So I think it's the market is starting to heal, and the inflation's starting to go away, and we're getting past the Fed. So the Fed has pretty much played themselves out of the game at this point. All right. Thanks, everybody. You guys have a great weekend. Have a terrific Friday, the rest of the Friday, and I'll see you guys Monday morning. All right. Bye now.